One of those coverages would be general liability coverage. So general liability coverage is one of the most basic forms of insurance out there. Pretty much everyone is required to have it by either the people they work with. Some people are required to have it in the state that they're in. But general liability coverage protects you from claims of damaging someone else's property, physically harming them, or damaging their reputation. So it's important to keep in mind with general liability that the word liability, anytime that's said, it's liability coverage covers damage done to other people. So it protects you if you're sued for the damages that are done to someone else. A lot of companies and people that you work with are going to require high limits, 500,000, $1 million, $2 million when it comes to general liability coverage. And a lot of people always ask me the question of like, why do I need so much coverage? My business isn't that large. I don't really have any claims. I don't know why they're asking for this. It's important to keep in mind that you don't have to be a millionaire to get sued like one. This type of coverage protects you against mistakes that you make or someone in your business makes that would result in harming someone or their property. When we talk about not having to be a millionaire to get sued like one, bodily injury claims are long claims that usually result in high payouts. If you send someone to the hospital, those medical bills can pile up and get very expensive very fast. So general liability coverage and having the right amount is super important. In general, I would say that a general liability policy is more for blue collar professions. You need them if you are a white collar worker as well, but the risk associated with blue collar professions is much higher. And it makes a lot of sense. If you think about it, if I am, again, I will keep using the example of a plumber. If I am a plumber and I do work at someone's house, it is much more likely for me to cause water damage, to cause physical damage to someone by leaving tools on the ground that they trip over and get hurt. It's just a much, much higher risk profession for damaging someone else's property or physically harming them. White collar professions, it's still important, but the rate will reflect that it's not super likely that there is going to be a general liability payout for those white collar professions. So if you think about it, if I'm an accountant and I work in an office, the likelihood of me hurting someone or damaging their property is not super high. I mean, I guess I could trip and spill coffee on someone, or someone could trip over my chair or an extension cord and things like that. But the loss experience for a plumber is going to be totally different than what it would be for an accountant. So general liability rates will be much higher associated with, contractors, blue collar work than it would with white collar professions. Those are more of a professional liability risk, which we will get into a little bit later. Well, let's break down general liability and talk about some coverage examples. So general liability coverage is broken down into multiple parts, multiple different sub-limits, which we'll talk about a little bit within your general liability coverage. You have property damage, you have bodily injury, medical payments, products completed, and a libel or slander, or sometimes called advertising injury coverage. All of these are covered under their own separate limit. Property damage and bodily injury are typically combined into one. So you'll have $1 million for your property damage and liability. Medical payments, we'll get into the specifics of that coverage. Will have its own limit. Products completed will have its own limit, and libel and slander will have its own limit as well. But all of these things are super important to consider and are key components to general liability coverage. Well, let's take a look at a specific coverage example for general liability. So let's say that I am a plumber and I own a plumbing business at 1234 Main Street in Cincinnati, Ohio, 45249. On the right here, I have my coverages all broken down with my limits and what is available to me. Let's get started with the bodily injury and property damage coverage. If you'll notice on the right, I have what is called a split limit. And you can tell that a split limit is a split limit by this little dash mark in the middle. What that does is it separates your per claim limit and your annual limit. So in layman's terms, what that means is if I am working on someone's house and I do some damage, leave some water on the floor, and they slip and fall and have to go to the hospital, for that claim, for bodily injury, I will have a limit of $1 million, so that my per claim limit is $1 million. And then my yearly limit will be $2 million. So what that means is for one claim of bodily injury and property damage, I will have a limit of $1 million per claim. but the maximum that that insurance company will pay out for that coverage within a year is $2 million. So that means that I could have two $1 million claims within a year. That's what they mean when they're talking about split limits. And when you see this, and if you see it on your policy, that's what it means. You might also see the language of your per occurrence limit and your aggregate limit. So the per occurrence is the claim limit, and then the aggregate limit is your annual allowance, so the maximum that they will pay out. That is probably what you will see there. But you can see that the coverages are broken down into their own specific line items, and they each have their own limits or sub-limits, right? So libel and slander, that type of coverage is going to be if you say or write something that damages the reputation of a partner, of a client, of really anyone that you're going to be in business with. If they sue you for damaging them, causing them to lose clients or something or other, this coverage would apply for those types of damages. Products completed is a little bit different type of coverage. The way that it works is that when I am conducting services for someone, they've hired me to do a specific job, or to manufacture or to make something. If the product that I have delivered has caused damage to someone or has injured them or hurt them, that is a separate limit. So the first line item, that bodily injury and property damage, that is if my actions while I'm conducting the work cause damage, I'll be covered there. But once I have completed that operation, once I've completed that body of work afterwards, there would be protection for that as well. A good example of this would be if I am a deck builder. Say I build a deck and then that deck collapses due to the fact that I did not do a good enough job in building that deck, and then people receive bodily injury and harm and are on that deck as it collapses, I would have coverage under my products completed limit because I had done that job, I had left, I had just done that job poorly. Same thing with manufacturing. Say I manufacture something and deliver it to the customer and it doesn't perform as expected and it ends up injuring someone, I'll be covered for that as well. Medical payments is a little bit of a weird coverage. The way that it works is very different than the other ones in the fact that for the first three that we spoke about, there has to be a demonstration of negligence on your part. So you have to make a mistake, you have to do something wrong, and that has to be proven, and then damages would be awarded. So fault has to be defined. It has to be defined that it was your fault, you caused the bodily injury, your product caused the bodily injury. You slandered someone. It has to be proven that you did it. Medical payments is a little bit of a different coverage in the fact that there does not have to be fault assigned. So someone could file a claim against you, and it is a very fast and quick way for the person that you have injured, whether that be a customer or bystander, whatever. It is a fast way for them to get supplemental medical payments sent out to them up to the amount of $5,000. So that it reduces the amount of time that they have to spend waiting on money and reduces out-of-pocket expenses. Insurance companies mostly use this as a way to cut down on bigger lawsuits and further lawsuits and really reduce the amount of litigation that would be needed to settle on those things. But that's kind of how the general basics of a general liability policy work. Couple key points to keep in mind. It's for physical damages to someone, things that are provable. You have hurt me in this way. Here are my medical bills. You have damaged my car in this way. You have damaged my building in this way. Here are the statements and bills. So you would have to financially prove the value and the damages, and then your general liability policy would pay out to protect you so that you didn't have to cut the check from your bank account, but the insurance company would step in and pay those bills and make those settlements for you. But it's always for other people coming to you, filing suit or claiming that you have injured or hurt them in some way. So physical and for other people. That's a key thing to keep in mind with general liability.